Hello, everyone. My name is Amali Alwis. I'm the Managing Director of Microsoft for Startups. And I'm here today with two new partners of ours, James Bagan and Andrew Betteley from Frog Capital. And we're going to have a conversation and share a little bit about what the two of our communities do and just really how it is that we actually support startups and scale-ups, and obviously share some of those inside knowledge around how we operate and the kinds of things that we get up to as well. Andrew and James, so lovely to have you joining today. Would you mind doing a little intro and just telling us who you are and what are the kinds of things that you do at Frog? Maybe if I go to you first, Andrew.
Sure, thank you. Yeah, so my name is Andrew Betteley. I'm a technology specialist working with Frog Capital. I work closely with the portfolio companies, specifically the CTOs, the product directors, and the technical directors, helping them through the challenges of scale up and helping them plan and execute on that.
Fabulous. Thank you, Andrew. And over to you, James.
Thanks, Amali. So yes, my name's James Bagan. I'm one of the operating partners at Frog Capital. My area is more on the commercial side, particularly sales and marketing, which is where I've spent the majority of my career. Run and sold a number of private equity-backed businesses, but now what I do for Frog is, I guess, threefold. I help lead the commercial due diligence, making objective appraisals of the commercial capabilities of proposed investments. Second thing I do, very similar to Andrew, but in a different area, which is working with our portfolio management teams, trying to help them identify and overcome commercial challenges. And the final thing is that I sit on a number of boards, working on a regular basis with the CEOs and the other investors, again, just trying to get the best out of our businesses.
Fabulous. So I think both of you are going to help us get some good insights into how VCs operate and all your secrets, which is really fantastic. So I thought it might be helpful if we maybe just kick off with, I guess, what both of our parties do. You know, what is it that you folks do as Frog Capital to support companies? And I'm obviously happy to share a little bit about what we do with Microsoft for Startups as well. Maybe James, if you can kick us off on that one.
Yeah, happy to. I guess perhaps just a little quick pen portrait of Frog Capital, and I think that will set the scene. So Frog is an investor that's been around for over 10 years now. We have been focusing on the growing opportunity that kind of sits between venture capital and private equity. We think over the last 15 to 20 years, there's been a slew of organizations startup organizations who are trying to take advantage of, shall we call it, the digital or technical revolution. And it's a segment that we describe as scale up. Let me try and explain what that means to us, and then that should illuminate some of the challenges that these organizations face. So the sort of typical businesses that we're looking for, they're going to be European-based technology outfits, not necessarily focused at B2B or B2C. But what they will have is annualized revenues of somewhere between 3 to 30 million euros. The central offer, the proposition, will have achieved product market fit in their target segments. They'll have strong momentum on the top line in terms of revenue growth, and they'll have an outstanding management team already in place. We will typically invest in rounds of anywhere between 5 to sort of 20 million euros. And I think this perhaps is the first part of the proper answer to your question, because it might be not unreasonably inferred that venture capital investors or growth capital investors such as Frog simply provide capital, provide money. And we do, clearly. And that money will be deployed in a number of different areas, depending on that particular business's ambitions and circumstances at that time. it might be that it's for increasing headcount. Maybe there's a huge sales opportunity, so they want to put a sales team on the ground in the States. Or maybe it's investment in technology infrastructure, or maybe it's product development, or maybe it's all of those different things. And sure, capital will go a long way to solving that particular issue or issues. However, Amali, there are, and you know this where you are, there are plenty of investors, and there is also plenty of capital. As you could probably easily imagine, over the last few months, not a lot of it's been spent. Investors such as us and leadership teams across all different types of businesses have been focused on their own organisations and their existing customers. So there hasn't been an awful lot of capital deployed over the last few months. So there's plenty of money. But that's been the case for a while. And so what we've tried to do here at Frog is we've tried to think beyond just capital. What can we provide to our investments, to our businesses in our portfolio that goes above and beyond? And in simple terms, what we've done is we've boiled the aggregated years of experience from all of the different people who work across our organisation into what we think is a very scientific methodology, almost a recipe for scale-up success, which we call the scale-up methodology. Something you can see on our website. It will address a number of key areas across a scale-up business's evolution. But in simple terms, what we're doing is providing them with the benefit of our experience, the benefit of our expertise, and our ability to leverage our network. And that is bringing us quite neatly back to why we're here today, which is the relationship that we have just started with you guys, in which we hope to see deliver massive benefit back into the Frog portfolio.
Absolutely fantastic, James. And I think, I know we've chatted about this before as well, which is, that big step actually from being a startup to scale up, and making such a significant growth around both your people, your technologies, your infrastructure, this way that you sell, and like you said, sort of creating almost a sort of a rhythm behind that, which companies can kind of take advantage of all of your knowledge around that, and certainly as far as expanding into your network, the benefit of that. And I think certainly thinking about Microsoft for startups, we sit obviously within the Microsoft business, and the network part is absolutely one of the key things we help companies with as well. And this is really around saying, look, if we have these companies who are bright, fast growth, driven by great people, and they are doing us the honor of building their companies based on our technologies, then it's in our mutual interest for them to be more successful. And that success is not just around either giving them money or giving them credits, but it's about helping them to build their businesses, develop their people, develop their sales pipelines. And certainly from the Microsoft for Startups perspective, the way that we reflect that in the way that we work is that we absolutely give those companies support with their technologies. So how do we help them to build their SaaS applications? How do we help them with their cloud services and their tools that they use there? But also, how do we help them sell? So how do we connect them to our, their partner network, our sales channels, and really think about how we can leverage the great relationships that Microsoft has already with our enterprise clients to basically say, look, how can we create something which is meaningful for all of those parties, something which the clients find helpful because they get this innovative technologies, something which we find helpful because we're obviously supporting companies to build with Microsoft, and something which the startups and the scale-ups find helpful as well, because we're effectively helping them to grow their businesses. So I do love that resonance of the sort of the win-win mentality, which I think probably is reflected in both of our organizations. Going back to that point around the difference between startups and scale-ups, and I wonder, James, if I could just pick your brain a little bit about that. What do you see as those differences when you think about maybe some of those companies who you might reject, or you might say come back in a few years? Why do you pick some and not the others?
There's no straight answer to that, I'm afraid. Let me break your question down into two parts. So the first part, what are the key differences between startup and scale up, and then the second part, how do we, on what criteria do we base our decision about whether we go forward with that investment or not. The first part, well, the clue is in the question. It's the scalability piece, and you guys will know this. You'll know this as one of the preeminent providers of infrastructure as a service. I mean, I'm old enough to remember, building my own data center for one of the businesses I ran actually not that long ago. And the world's completely changed now. The technology has just moved beyond all comprehension from just almost, I'd say, 15 years ago. So, as an entrepreneur or a CEO of a startup business, you probably can, if I can use this phrase, you can get away with taking a nascent product and selling it almost to friends and family within that network. You can also hire that way through your black book of known contacts, and for a period of time that will probably be enough to get you going and maybe from a bootstrap basis just get the business off the ground and just survive for a couple of years. But invariably what happens is that these entrepreneurs are quite ambitious. They want to see their babies fly the nest and grow into something much more than it is today. And almost always, Amali, that's going to involve capital. Now, I wouldn't suggest venture capital or growth capital or private equity is always the answer, because it absolutely is not. But capital of some sort is going to be required to scale that business. So I'll let Andrew answer it from a technology perspective, from a commercial perspective, moving from what I call founder-based selling, so selling from that known network into new geographies or new segments or new sectors or new industries, maybe not direct selling, maybe through partners in the channel. That's a very easy thing to get wrong. It can also be a very expensive thing to get wrong, and it can take an awfully long time if you don't know what you're doing. And again, I go back to the Frog scale-up methodology. What we've tried to do, as I say, we've tried to bottle all of that experience in a set of processes that basically try to eliminate as many of the mistakes as startup entrepreneurs make as they move into that scale-up phase. The second part of your question, well, as I said, there's no straight answer here. As you would imagine, it's like pretty much any decision made in human dynamics. It's a mix of different things. Obviously, chemistry is hugely important. We've got to invest in people and management teams. We've got to buy into the CEO particularly and the people around them. The value proposition itself, as I said at the start, product market fit. There's got to be some element of appeal. It's already been bought. It's already been deployed and is being used to benefit on a regular basis. We need to see a path to profitability. An awful lot of, in fact, the majority of the businesses that we'll assess won't be profitable at that point. They might be approaching a cash neutral position, but probably not. They're probably still burning cash. But we've got to be able to see and believe the plan, and that's not always the case. And then we've got to think about how we might realise some value for that business, not just us as investors, but all of the shareholders. So we've got to think about, well, who would buy this business? Who would be either the next owner or the next investor to kick it on to the next stage of growth? So as you can see, there's a number of different things that we will assess, and then as a group of investors, we'll then sit and discuss to death. Actually, we talk about these things in extreme detail, and we will talk about it for many hours and possibly many days before we come to a conclusion about whether we're gonna move forward with the business. And I'd love to tell you we get it right every single time, but be a little disingenuous if I'm honest. But we get it right. We get it right. Certainly get it right more often than we get it wrong. And by the way, it's a great opportunity on a public platform just for me to say that, because because we don't choose to invest in a business doesn't mean that's not going to be a crackerjack business. It might just mean that it's not right for us at that particular time.
Yeah, and I think that's the same for us as well, because when we are choosing whether to work with a company, and we work with generally companies in that B2B software space. We work with a very small number of companies actually, and very much in that growth phase, a minimum of that, $1 million in revenue. If they've taken investment, $1 million or $2 million investment, post product market fits are the same as you, and we would generally see that as being at least 4 sort of sales of a product to an enterprise client, that kind of thing. And the reasons for that is we know where we can help. It doesn't make sense for us to be disingenuous with a company and bring them on into a program where we find that either we can't help them with what their needs are. And I think, going to our previous point, there are very different needs of a startup versus a scale up. So aligning where you can kind of support with that.